Well, that's one of the good things at the moment in the sense that if the market has been relatively complacent in the near term, that means the price of protection is relatively cheap. So, buying options, we've seen customers buying puts, put spreads. You can shift into defensive equities, low volatility strategies have lagged the market recently. They're not looking expensive. So shifting some of your portfolio from market cap equities to defensive equities, these are all things that you can do. It is very hard to predict the outcome of an election such as the Germans, which is tending to swing about with different candidates and different parties coming in and out. So I think predicting the outcome and placing a bet in one direction is a fool's errand. What's better is to keep your portfolio pretty much, in line with the market, but add some protection around the edges so that if different outcomes start to get priced as the election becomes closer, that you're covered, you're weatherproof, if you like.
Altaf, I'm definitely guilty of bigging up elections over the years and actually them being a damp squib in terms of a market reaction as well. I've done it way too many times. What about this one, though? Is it different? What are the worst possible scenarios and the best possible scenarios for the market? I mean, because, of course, depending on the stripes of the government and the coalition that's eventually created as well, it could have greater ramifications for broader Europe, not just Germany.
Yeah, I think Germany remains the powerhouse of Europe. It's the largest and most important economy in the European Union. It's also pretty much the most outward-facing and export-driven. So it really is a barometer, if you like, for the way that Europe, the European Union in particular, is going to behave over the next couple of years. So it is an important election. You're right to big it up, but at the same time, with a coalition, with the different stripes that could be incorporated, it's hard to see, a radical shift. What we are seeing, and if you like, I wouldn't call it a worst case outcome, but what the market is starting to price in a lot more is a shift more to the left, more red. What we've definitely seen priced in is an increase in green power and the spending that will need to entail. So there are definite issues that are going to come to the fore from this election, but whether they're going to be negative for the market, I think is going to be panned out in the medium term.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.